Well, I'll tell you something, I've got some good stuff to show you today, and then we're also going to follow up with some DK, some DraftKings news and some HIMS news, because HIMS actually broke the trend yesterday where we had a fantastic day in the market. You would have seen HIMS actually perform pretty terribly in the market yesterday, and we'll have a look at why the reason is for HIMS performing so badly. But what's been interesting at the moment is we've seen on Fridays we've really seen a big massive sell-off. It's been the trend for quite a few weeks now. We have a pretty good week, and then we get to Friday, and Friday is 2-3% down, and we lose most of the gains, and we have a bit of a negative week, and it makes going into the weekend, it makes it feel quite a negative feeling. And we've seen quite often that when we start the week, we've actually seen quite a positive open, and the same was again today. If you look at the S&P was up 2.6%, and the great thing is that it opened up and it just held them gains. And you look at the Nasdaq as well, the Nasdaq was up 3.5%. So once again, you know, when we have all them stocks, when it's down 3%, we see stocks losing 5, 6, 7%. It works totally the same way, is that when we have Nasdaq up, you know, 3.5%, there was a lot of stocks up over, you know, 4, 5, 6% once again. And it was really good to see that just steadily hold them gains going into the close, which was a good sign. And that also meant that looking in pre-market today, it looks pretty positive once again in pre-market, so we'll see what happens. Now, why was the market so strong yesterday? Why is it looking so green today? Well, obviously we've got a few earnings. We've got Netflix tonight, which is key, but the big thing was the bank earnings. The key thing was to have a good start going into this week, try and create some positivity. And that's what happened. The banks turned around, and actually I've got it here from Seeking Alpha, and it was actually a quote from Bank of America, which had good earnings as well, just like JP Morgan, and basically saying consumers are continuing to spend freely. And also there was another quote here saying that analysts at the moment are expecting that the talk of inflation will cause recession and other fears into the economy, and we're just not seeing it at the moment. And this is key, because these guys are seeing what's going on better than anyone else in the economy. They are holding so much bank accounts, they're seeing transactions and seeing what that's doing. And if you listen to a lot of the bank's earnings, this was supposed to be a quarter of quite negativity. This was supposed to be a lot of them inflation pressures really hitting the consumer stopping to spend. And there is some of that going on, and we're seeing a few companies having a few cutbacks. But the problem is you look at the market, what has the market done in 2022? The market has priced in a crash, is priced in a recession. You see here, you know, you got the indexes down, you know, towards 30%, same with the Nasdaq. You know, we're having at the moment the worst year in 40 years at the moment in the stock market. And you're seeing here the stock market pricing in a massive recession. Now the problem is, and we've been saying this quite often at the moment, like there is going to be some impacts, there's going to be a slowdown, but not what's priced in. And you look at some of the individual stocks. We were talking about this in yesterday's video, talking about it's like a 2020 crash all over again. Whether you want to look at the likes of Meta, which I mentioned in the video yesterday. Meta is currently down at 11 times earnings. Meta, one of the gems in the stock market, a company with great history of revenue growth and will continue to have revenue growth, a profit beast, a balance sheet beast, and this stock is currently down at the moment 63%, and is at the same sort of prices it was at in not even 2019, not even 2018. I'm gonna have to go further back. It was Meta at the moment is the same sort of prices it was at in 2017. You know, like a great company like that has had 5 years of share price performance wiped off. And that's exactly what's getting priced in. And it was like the other stocks that we mentioned, like PayPal. Same again, you know, this is back at prices it was at in, you know, 2019, 2018. And some of the growth stocks, they've been hit even harder in these times. You know, Block is the same levels as it was in 2018, 2019. Same with Shopify. All these stocks at the moment, even great value stocks and even some of the growth stocks, have had years of share price wiped out. And why is that? Well, because a lot of the market, a lot of Wall Street, a lot of analysts are going, we're going to have a really bad recession here. And it's clear looking at it, the banks are going, at the moment they're getting this wrong. And that's the big thing. And yesterday was a time of a lot of investors, a lot of Wall Street panicking, going, oh crap, you know, if this is actually, if we're holding up okay here, like some of these companies could be coming in with some good earnings in the next few months. we need to make sure that, you know, at the moment we're placed very negatively on the market. We're very short on the market. You know, you look at the headlines, the fear that's out there, look at what's happened to them stock prices. They went, you know what, that Friday sell-off that we had, we should allocate some money in here in case we've got this wrong. And that can have a knock-on effect where people see other people jumping the gun and going, you know what, it's actually not that bad. We should be actually buying here right now when these stocks are down this much. And you see everyone else then panicking to get in. And we had that in the CV times. The CV times, we had a big massive dip, and then obviously people started realising, actually, this CV situation isn't as bad as what we thought. And that caused a big cycle, a chasing cycle of people trying to get back into the stock market. And it very much can happen this way around if people actually go, actually the economy is actually not that bad out there, and people start chasing and going, you know what, look at how low these prices are, we should actually be buying some of these stocks. And that's exactly what we had yesterday. We had people chasing in after that big sell-off on Friday and going, we should be owning some of these stocks right now. And it looks like the same's going into Tuesday at the moment. So yeah, obviously that was a very good sign for the markets, and very well timed of the video that I posted yesterday. I've got to say that was a little bit annoying though, because what it did is I was looking at Tesla. Tesla was down 5% on Friday, and I was like, this is actually quite interesting. Unfortunately, that meant that everything that it gave away on Friday came back, and I was like, oh, that was a good opportunity to be buying Tesla at some good prices on Friday, but never mind. We'll see if we can we might have an opportunity again. You never know what will happen in the short term, but that was a little bit frustrating. But getting on to these two stocks, because there was some news out with HIMS and DK. Actually, I thought both of these stories were quite funny, and I thought that it was once again a case of analysts on Wall Street making a bit of balls up once again. So we'll start with DK. DK actually had a good day, was up 5%. Looks okay in pre-market as well. And this is a stock that's been unfairly sold off this month. You see it's down 29% and for no reason at all, which has been a little bit annoying. But what came out yesterday was an article on DraftKings and talking about some of the data that came in, and the data was pretty strong. It basically said that there's no recession at the moment seeming to affect sports betting, as the betting volumes are still very, very strong, which we've heard before, and we've heard very much before. DraftKings multiple times come out and say, in the last earnings, we've had no sign that a recession would hurt us, and historically it shows that betting is not hurt by a recession at all. So this is basically stuff that we've already known, and people going, oh, it looks like it's still pretty strong and there's no slowdown. So it was funny to see a Wall Street analyst realising something that we've already known, that we've known and we've been talking about before. Also, what was positive is to see that obviously states are still doing very well, the ones that are operating. Now, we know once again before that, like for example, New Jersey, which is a very more mature state for DraftKings. It's one they've been in for 4 or 5 years now. It's also a profitable state, which is generating good amounts of contribution profit to the company at the moment, which people don't talk about, that clearly there's a path to profitability here because the mature states make profit. But even then, even the mature states that have been like, you know, around 4 or 5 years, they still contribute good revenue growth. That's the thing, like New Jersey, I think last year like contributed like 30% revenue growth, and that's a mature state. And you've got a state there that's producing profit, also good amounts of revenue growth, and people and analysts are shocked, like, oh, like the more mature states are still growing really fast and they're not getting affected by a recession. And it's like, come on, we've been talking about this for so long. It's I don't know how it suddenly snuck up on you. And the other thing is the hold rate. The hold rate for the last quarter looks pretty good. DraftKings actually did confirm their earnings, which I believe is on the 4th of November, which once again is a Friday. And they basically said the hold rate was pretty good previously, and even this weekend it looked pretty good, as there was a few upsets in the NFL. So that's all pretty good for us. It's been a pretty good season at the moment for companies like DraftKings, so you got a boost from that. So pretty positive news out there from DraftKings that helped it outperform the market. Now, one stock that I did own that did not outperform the market yesterday, where there was a lot of things left, going up, a lot of growth stocks going up, was HIMS. There's been a bit of negativity at the moment creeping in with HIMS, and you'll see here that it was actually down 9% yesterday, so massively underperforming the market, and it's just had a tough time in general. The last month it's down 24%. Now, the reason why is there was a negative article that came out, and there was a downgrade from Piper that saying that HIMS can potentially not meet the forecasts that Wall Street have laid out at the moment, and they compared it to other companies, saying that their growth is very strong at 74 to 78%, and that compares to a lot of the competition that only has high teens growth, basically saying we can't see why HIMS is going to perform so amazing when everyone else is struggling for growth. And they also came out and said that they don't believe that they can achieve profitability, saying that profitability is still a few years away, and they don't think they can execute on profitability at the moment, and they put their price target from $6 to $8. Now this is absolutely bonkers, because all you need to do is go to August the 8th when HIMS reported earnings, and you'll see that they had once again, strong revenue growth. In that quarter, they raised their guidance once again, which HIMS has been doing amazing, and they would have had a good sight into this quarter that's coming up before raising guidance. So HIMS has a history of delivering fantastic earnings or revenue growth and hiking them up at the moment. So if anything, I would be going off HIMS track record, which has been absolutely amazing what they've been delivering on revenue growth. And also in the last earnings report, HIMS actually turned around and said that they're actually going to expect profitability within the next 4 quarters. So this just, what they came out with just totally goes against what HIMS actually brought out in their earnings report. I don't know if this is just lazy Wall Street not actually looking at what HIMS has been doing and saying, but they've been absolutely demolishing their financials recently, over delivering every time. And HIMS themselves said we are going to get profitability in the next 4 quarters, which I have no idea why Piper Sandler actually came out and said they're not going to achieve profitability. And when you actually look into the HIMS earnings call, they actually said that we could achieve profitability this year in one of the quarters. So this was just unbelievable. This is just, I don't know what they're trying to do. I don't know if they're trying to get the share price lower so they can buy shares at cheaper prices, or it's just lazy research, but it totally goes against what HIMS has done previously, which is amazing execution, and just comes out totally against what HIMS said in the last earnings report, which is that they will get profitability in the next 4 quarters, and then Piper Sandler came out and said they're not. And it was crazy that people followed what they were saying and then decided to sell off HIMS down 9% and put it back down in the $4 range, which is just absolutely insane. And this is honestly such an opportunity as HIMS. Like right now, even in this negative market, HIMS, in my opinion, should be a $10 plus stock. It's an insane upside, and then you're not factoring the growth that they're going to have in the next few years. It's just absolutely bonkers. So yeah, the market just seemed to absolutely tank the stock for no reason on what seemed very poor research, which is annoying as a shareholder. But hey, you know what? If you're going to give me some more chance to buy shares at $4, I will take that at some point. I did buy HIMS, I think 2 weeks ago, but now it's back down in the $4 range. I'm just like, this is one of my favorite growth stocks in the markets, and to be nearly back, back at $4 at the moment is just insane. And I'll be buying some of this opportunity if Wall Street's giving me it. So yeah, just a few things there to talk about at the moment, guys. Hope you enjoyed the video anyway. If you could smash that like button if you're new, subscribe, that'd be absolutely amazing. And I'll see you in the next video.